We are here, we are here, we are here on this amazing day. Okay, everyone, this is Cam Jones, FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay, everyone, we are looking at GBP, JPY. We're going to start off with our red marker. We are starting off with May of 1993. So once the market started, it pushed right down to an area of support. It tried to reach back up to area of resistance. It lost momentum. We see that with the 2 wicks right here. It pushed right back down. It played around this support line a few times, coming off of it, touching, coming off of it, touching. Finally breaking, fully breaking through the support. Create a major area of lower lows. On top of that, this is probably the lowest the market has been back in 95, and then it picked up in 2012. So back to action. From there, the market pushed right back up, and we see that retest to support. We see a second retest, a third retest, and from there the market was off, push up. Broke previous areas of resistance from the market started off at. Came back to retest previous of resistance that became support of where the market started off at. So we got another push to the top, another push. So 2 more pushes created new areas of resistance. We see 2 wicks at the top here, showing that the market losing momentum. It lost momentum. Big bearish drop back down to the bottom of our areas of support. Is it able to hold? No, it broke right through. There's a formation that started what made this push up happen, and I actually see it maybe about twice in here. It could be more on a down time. It could be more formations on a lower time frame, but I definitely see it here. So what we see is a formation. That's the first leg, second leg, third leg, fourth leg. Retest happened here, and that's when that push up happened, all the way back up to higher highs. I'm going to go back because I don't want to end it just like that, because there's more inside here that's very important. Besides this formation of the double bottom being right here, there's another one here. There's another one here. There's something going on here, and that's just from experience. And there's something going on here, but I'm not going to. It's like a W, a double bottom. There's a double bottom here too. So this whole section was almost the same pattern over and over and over, which is double bottom, double bottom, double bottom. They're hidden inside there. If you go down a lower time frame, we may be able to see it more, but we definitely see it. So when you start seeing them double bottoms forming, it's going to be a push up to the top, and that's what we got. We got that full back push up back to the top. Created new areas of high highs. Got 2 wicks to the top, showing that the market is losing momentum. Lost momentum, came back down. Try to retest previous areas of resistance, wasn't able to make it up to the top of the highs. So the market pushed right back down to do a retest of previous area of resistance to push down again. So we got a major bearish movement of 3 pushes to the bottom. Went back to a major area of support. So we know when the market heads back to the support, it's going to head back, try to reach back up to high highs. The market pushed right back up, wasn't able to go up further, and the market didn't even break. It didn't even break the previous area of the resistance. It touched resistance, it got close to resistance, it went right back down to lower lows. I see a formation, double bottom, first leg, second leg, third leg. So after the third leg, we know we get that fourth leg with that retest that happened here. And then once we get that, the market pushed up, created new areas of high highs because it previously broke the resistance. Wasn't able to try to come up to higher highs. Higher highs, wasn't able to come. So it's kind of, price is trying to return back to previous market price. Wasn't able to do it, so shorting itself. We see the resistance, we see the support inside of it, retested twice on the way up and on the way down. Went back into the areas of support, broke the area of support, went back to major areas of lower lows, and now the market's trying to shoot off. There's a pattern in this area too. There's something going on in here. the first thing I see all this wicks. So there's wicks here, the wicks here, the wicks here, the wicks here, the wicks here, and they long wicks too. So when I start seeing these long wicks, these things shows me that the market is trying to consolidate. It's trying to consolidate. It's trying to lock itself in this whole range pattern. You know, sometimes it may break little levels in here, but the overall goal is trying to definitely get out of this higher high so it can reach new level higher highs. But for right now, we're not too sure what's going on. We can identify that something's going on here. This almost looks like a triple bottom. It could be forming, but first leg, second leg, third leg, fourth leg, fifth leg, push up, retest about to happen here, another push up. This could be a formation, because this could be a single bottom here, and then it turns to a double bottom, and then we got the push up. Or you can just call it a triple bottom, and we got the push up. But is this, from this time frame, it looks like the push up is happening, not 100% sure just yet. The first thing we're going to do, the next thing we're going to do is erase our red markups, and we are going to look for the overall trend. And the way we find the overall trend is identifying the market structure for the past few years. So we know that from the market structure we are in a lower low, and we coming out of lower low to create new areas of high. So let's see if the market is really trying to do that. We're going to go down the time frame. You're going to stay in this time frame. We'll look for SR lines. That starts with going to price action. Looking over to your left to see what price action is trying to break. So it's trying to break something in this area here to go up further. But we can say it broke already because it actually, like, it was trying to break here, and it did. So if it had to go up to the next level, we're going to grab this peak right here. And let's say if we go one level down, we can grab this invert right here. So we can see here, okay, so what we can see here is that if it goes up, price is going to reach this level. If it goes back, price is going to reach previous levels, and it can drop further, go further up. If you go down the lower time frame, we are going to do a top-down analysis with creating SR lines within our SR lines that we created from an earlier time frame. And the way we'll do that is we'll work within the SR lines and our SR we will work within our SR lines. And we're going to start off with the peaks. So there's a peak here. There's a peak there. Oh, I think I did something wrong. Never mind. There's a lot going on in here. There's a lot of funny business going on in here. So I'm grabbing the peaks, and then I'm gonna do I'm gonna work bottoms up, and I'm gonna work on finding inverted peaks. So right now I'm still grabbing peaks. We can see how perfect everything lining. Let's work on bottom up. Let's see if we can see any peaks. I go a peak right here. I mean inverted peaks. But I just found a peak. There's a peak here. And we can see how price is just lining up so perfectly on my SR lines. And that just comes with experience. The more you work on your SR lines, the more you mark up, the more you work on your trend lines, the more you watch the market, the easier it gets. It gets extremely, extremely, extremely easy, everyone. You have no idea on how much you can do in the market with this. It's amazing. Very, very easy. And in fact, there's one more pattern sitting here. There's an invert. There's something going on here. And we can see that because it touched our wick in this area here to a T. Okay, so let's see if we can identify what's going on in the market. Let's look for patterns in the market, see if we see anything. Okay, so what I see here, I mean, like, this is not for sure. It's just the market. This is what it looks like. So what I'm doing right now, I'm paying attention to the last 1, 2, 3, 4, 5 candles. The last, especially 3 candles, we went from about 75% of a candle to a second one was a 75% of a candle to a 10% of a candle. So the market like is losing momentum. We're not for sure, so we're gonna see if we can see something in a lower time frame to find a pattern. If we are looking for patterns, we are going to go to Google. We are going to type in Forex pattern cheat sheets. That's Forex pattern cheat sheets. And you're going to go to images and you're going to view every pattern that you see. You don't have to memorize the name, but memorize what you see. The more you do that, the easier the market gets. It gets extremely easy. Okay, so we can see that the market pushed up. It created a support here, pushed up, created another area of support. And we got the retest that happened. And there's a push up here. Now we can see that market losing momentum because we're not sure fully yet until we see something breaks this area where this wick is at. So once this green candle, if it engulfs this over, that shows the market is going to go up. So if this green candle goes up and closes out above this red, there's a chance it's going to go up. So we're looking at some type of pattern in the market. Right now, all we see is the market is losing momentum, and we have a doji candle. The second to last candle is a doji candle, and the third one's trying to pass it to engulf it and close out for the engulfing pattern for it to be acceptable to take the trade. But for right now, we don't know. It's a waiting game because it looks clean right now, but it can turn around and do something totally different. But for right now, it looks like it's on an uptrend. So let's say we went online, we found our pattern, we identified the pattern. Let's say we're looking for entry. We're going to take it to our next line. That will give us a total of 86 pips, which is an amazing move. We're going to pull this stop loss. Take a look down at time frame. To play it safe, I'll take it about 60, 65 at the bottom of these wicks. I want to take it super safe. Play it here. There's a chance the market still could come back and take me out my game for 77 pips. But I'm comfortable with between 50 and 60. Say 55. So 55 on the low on the way back, 86 on the way up. Amazing trade, everyone. That is amazing trade. Let's go back. Let's take one more look at what we see. So also, if we grab our shade box and we put it on the highest high and we just draw it down just a little bit, to say we grab another, grab a few levels down, right? If we wait here, the market will identify itself. Very easy move. So whatever's going on in this market, it could be something like this. For example, we do know that we are in a buy trend, so the market is in an uptrend. We got that push up, that retest, that push up again, that retest. It pushed up once again. It's trying to retest. So we don't know if it's going to be a push up and a retest again. If not, the market can just come straight back down, retest previous areas of resistance a few times, but just go back to previous levels and then work its way back up. But no matter what it do, you'll be able to take it level to level and see each and every move because you will know what the patterns are to take the entry, to take the trade to the next level. Like I said, amazing move, 86 pips, GBP, JPY. Let's get in this week. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you.